Morning everybody, welcome to Stockradar, Stocks on the Move for yet another week. Today's date is the 18th of the 8th, 2022. The weeks are rolling by. What are your trading demons? Why are you not as successful as you should be? In trading tactics, we'll look at some of the reasons why. The good news is it's probably not that hard to fix, okay? Without knowing, you're probably almost there. It requires a little bit of grit in following a strategy. It's actually about you making a choice, the right one or the wrong one. I'm going to talk to you a little bit more about that in trading tactics. If you want to know what I do, go to Stockradar's About section, learn all about how we work and what we can do to help you, okay? You can also then take a free trial and have a good look at what we offer. There's a live trading centre with trading examples, a monthly newsletter explaining many aspects of how we work, a lot of education in there, and daily stock alerts. There's also a great source of education in our Stockradar Chronicles section, lots of articles and lots of talk about technical analysis, behavioural analysis, all that sort of stuff, okay? So first we're going to get into today, okay? Conquering your trading demons is the theme of it today, which is always a big problem. So don't think, don't worry, just do. It's not that difficult. We're just, you've probably already done the hard work. We just need to get your flow right and get your steps right, okay? So we're now going to look at the overseas markets and we'll come into the ASX 200 and find out some stocks, and then we'll go to the educational side of trading tactics. Okay, so first off, we have the Dow Jones Industrial Average. We're getting a rally, okay? So we're now got to decide, is it going to go up or is it going to come back down again? So at the moment, the Dow Jones is not looking too bad. It's actually got through this area here where the resistance was from the trend line and the moving average. It's moving ahead okay. There's not a lot of volume for me to get excited about in the Dow. Downside pressures are easing. But now that we are seen to be through here, we're probably looking for this one to go back towards the high. Okay, so that's what the Dow Jones average looks like. We're going to look at the Nasdaq, a little bit different. It's still sort of fighting a little bit of the resistance here. It sort of poked its nose through that downtrend and moving average line. It's chipping away there. We have got some reasonably good volume that has pushed this rally. Nothing compared to the selling we've seen. But so it's probably a tentative thing rather than me thinking an explosive move ahead at the moment. It may creep a bit higher. We'll just have to take it step by step at the moment. But, you know, it's making good headway. We're seeing a good reaction to the fall down. It may go a bit further, who knows, but we'll keep an eye on it. Just want to show you also the S&P 500, which I don't usually look at, but is also, if we just look at this as a broader index, and we look at the volume here, it's been quite substantial these last 5 weeks or so on this strong move higher. So we've seen a big sell-off and some good volume. We're seeing some buyers come back into the market. So we're in that mid-range area. We've got to be careful. That's why I really am looking at specific stocks rather than indexes, and that's how I work. Anyway, we're seeing a climb at the moment, and it's still going. So we'll let it go as far as it wants to at the moment. Okay, commodities. Copper's really not doing anything at the moment. We won't spend much time on that. It's rallying. There's not a lot of resistance there. Sorry, there's copper again. Copper. Touchy mouse, sorry. Copper's, he's putting a bit of a rally with some heavy selling here. There's some buying interest, nothing great. Momentum's really weak, so copper doesn't do anything for me at the moment. Brent crude, we're sliding down the scale slowly here, so we've got to be careful. We've now broken below the average in that sort of S1 area there, and we've got this trend line support which may hold it. So that's the last bastion. Then we've got S2, so it may well come back to settle down around the $85 level for a while. There's not a lot of volume in this, and the momentum's just turning to neutral, so it's not an aggressive sell-off at the moment. So it's easing back, but I would think it could very easily be turned around again. But anyway, we're easing back at the moment, a bit of pressure on it, so we'll just monitor this for the moment. It is starting to break down a little bit. Okay, gold, it's really telling me nothing. It's not doing anything. It's being rather boring. It's come back down again. It's had a small rally on some very weak volume. Momentum's still negative, so I'm not going to spend much time on gold. Our gold index looks pretty terrible as well anyway. So if you want to do golds, that's up to you. Okay, the ASX 200 now. Interesting, we've just seen the poke down nose through here. We've still got a couple of days to go through yet. We're obviously down a little bit today, so it's not convincing as yet, but we've got this R1 level here, the moving average and downtrend line, all pointing to this area here, which is probably, significant. It really just says that you may, if it holds above here, it may well then get back to the highs again, and that's quite possible. Momentum is still fairly weak, although it says crossing up a little bit there, showing that the selling pressure may be easing a little bit, which is probably understandable considering what we've seen there. I'm just going to show you one little chart here. This shows the volume as well. This is the same period chart I'm looking at, just from a different source, because I don't have volume with my provider. But here you can see here, this volume here has been pretty steady. Again, like the Dow, it's been steady without blowing the lights out. Blowing the lights out is back here when we saw the bottom of COVID. This is steady, so that's a good sign. Again, as I said before, we may be getting a situation where we might be going to be range trading a bit for a while, while things become a bit clearer because there's a lot of muck out there ahead of us. This reporting season will also be an interesting situation as well. So far there's been some interesting stocks there. Brambles is one that we got into a couple of weeks ago. It's rallied well. There's a couple of other stocks also looking pretty good. We'll look at a couple later on. Anyway, so for the portfolio. Okay, so Stockradar portfolio was flat at 22, so no ins, no outs, no nothings this week. So if the Stockradar stocks are flat at 21 stocks of 162 cover, which means 13% equities, 87% cash still, and we've got one ETF, which is Bear, which I know has come up as a stock alert this week. Maybe that's going to get taken out, I don't know. We'll have to wait and see. So we're certainly in that state of flux at the moment. Conservative portfolio is 5 out of 20, so it's 25% equities, 70% cash, a bit better than the Stockradar portfolio. The Energizer is full, 5 out of 5, and the Energizer 10 stock is up 1 to 9, and it's 90% equities, 10% cash. So those ones that we like to leverage to the upside, getting pretty full and getting hopefully set for some more moves higher on the stocks that we hold rather than the index. Okay, top sectors still utilities and energy. Again, from a day-to-day basis, I'm saying energy at the top, information technology at the bottom. The next day, information technology at the top, energy at the bottom. So it's been a bit of a seesaw between those two. But the technology stocks are recovering again, especially in America, so that's a good sign. So that's what the portfolio looks like and how the makeup. The breadth is still not fantastic apart from our leveraged portfolios at the moment. Okay, so what I want to do now is go to some specific stocks. Okay, so last week I covered a few coals. We've seen coals had a bit of a break today. I'm not covering it today. You'll have to go to Stockradar and have a look at it, but this is having a fairly good week there, as are some of the other consumer staple stocks. Endeavour, which I'm going to show you a bit later on, and Woolworths is doing a bit better. So there's a couple there that are performing okay. Nanosonics I'm going to review again. Some of those stocks I talked about, CBA, CSL, all those ones in range trades at the moment. We're not really doing much there. So that's the review of last week. So for this week, we're going to look at Computershare. And again, we have a fairly hefty profit here. So this stock has rallied from February 21 right through to now. So this is a very lengthy trend for me. 18 months is quite a long trend. Doesn't usually last that long, but it is good. It's like Aristocrat, Computershare. They've done some beautiful trends, but we've got to look at these things and make sure we protect our profits. So for the moment, we've now got almost a bit like a double top up here. We've got resistance here at R1 clearly. Okay, we've been raising our stop from our entry, from our alignment of the stars. We raised our stop all the way up here without any 10 or 15% correction, and now we're getting up to here. This is a lengthy trend, as I said. We're up 62%, including our dividends. So our stop has got to be watched at the moment. So our stop is in here somewhere, and if it goes off, I will be out and will take my profit. I need to protect this profit and not let it get away, which is a common problem of traders saying, well, I'll give it another week, Don't do it. When your stop goes out, get it on, listen to it, execute it, and then move on. Okay. Anyway, Computershare is looking interesting. It may go straight through R1 back up again. Who knows? But I will watch my stop, and if my stop goes off, I will be out. Nanosonics, we're reviewing this action. I'm looking at some of these stocks that go straight up. I can't get onto because there's no substance for me. So I really need to get a pullback and a higher low, which is what I'm looking for Nanosonics. It's keeping going at the moment. It's now up to this R1 level, which should now start to give it some trouble. Okay, so R1 level, we're through the average, but I'm looking for a pullback to a higher low. This is the shape I'm looking for, okay? It hasn't come as yet. Again, trend reversal price projection is what I'm looking for here. Now we're seeing some fresh buying here, which is good. So signs are good that there may be some sort of base in place here, but I want to get a pullback before I look for my trend reversal pattern to unfold. Okay, trend intensity rating is -3, so it's gone into the neutral zone. Again, it's also not about the price action. It's the price action that's important, not the price level. So what I'm really looking at is the behaviour of the price. And the price levels can be $100, and they can be $10, they can be 20 cents. Doesn't really matter. It's really the price action. So here with Nanosonics, I'm not worried about the prices over here. I'm just worried about this price action. That will tell me what to do. Trade plan is your friend. Okay, so that's Nanosonics. Still looking interesting. We'll follow that one through for you. One of the new ones I've got on for you today is TPG flying under the radar a little bit. Okay, so since we had all this corporate manoeuvring not long ago, TPG Telecom is here. It's had a downtrend, which now seems to be over. So since about May 21, so just over a year, this has been forming a base. Okay, so we've got a price low down here, we've got a rally, we've got a pullback to a high low, which is what I'll be looking for on Nanosonics. This high low, that tells me there's some substance to the buying here. Then I get a rally here. Now what I'm going to do is I'm just going to squeeze up this volume here, take those big ticks out, so you can see a little bit about here. So what we're getting here is some reasonable volume on this last rally, which is a good sign. And it's quite a steady rally too, considering what the market's been doing. So I'm looking for a trend reversal pattern up here. Okay, we've got the volume, the moving average is positive, it's above the average, so it is cocked and ready to trigger a buy. Trend intensity rating is +1. So through here signals a trend reversal for TPG Telecom. Hasn't happened yet. It'll be a few weeks yet before it does, but it's certainly worth watching for you for a little trade there. Okay, next DC. It's sort of my tip of the week, if there's such a thing. Let me just squeeze this in a little bit. Okay, so we know we've got our big support back down here. Okay, we had a big rally for next DC. It's now gone into a consolidation pattern. It's tried to break down here. Each time it comes down here, the ceiling is dried up, which is a good sign. And I like the way this support has come in well higher than the previous lows. Okay, so that's a really good sign to me of strength, and it's been repeatedly tested, so that's a really good sign, but we haven't got a reversal yet. So now that I know support's there, I'm looking for the next parts of indicators, which are break of the average, some volume, things like that. So if we have a look here now with next DC, we can see there's a bit of green bar starting to appear here. This is starting to move into neutral. It's just passed above the average. So I'm really looking at this trigger point 1180 as the key to setting off a potential rally back towards the highs at $14 for next DC. Everything is in place. It's just about getting the signal, and once we get the signal, then we do our trade. Okay, so next DC is looking. There's a few stocks, Irish, a couple of other stocks in that sort of area, which is looking quite interesting. So you might want to follow a few of those other stocks, but next DC is one that looks good for me at the moment. Another little one I've got here, which is outside my 162 stocks. Every now and then I look at some of these, and in fact, I'm going to be covering in my newsletter this month quite a few stocks that you might be interested in. A certain sector that seems to be moving. It's been quite sold off, but it's looking very interesting again. So I'm going to be covering some of those stocks in that area. And GR Engineering is one of them, which is performing pretty well. It's on the high side, although it's only at $2.40 at the moment, or $2.33. But it's had an enormous rally. If I look back here on GR Engineering, you can see the big trading range pattern it's had for some time. And it's now breaking to new highs at the moment. So as I look through the groundswell of stocks in this sector and related stocks, it looks quite interesting. As I say, I will cover that in the newsletter at the end of this month. But this one here, it's had a great trend. It hit the highs, and then we got a natural reaction off the highs here. There wasn't a lot of selling here, as you can see, but all of a sudden the buyers just jumped on this, saw the price wasn't going to go down. Excuse me, they've jumped on it and rammed it back through the highs again. So that looks like a very bullish thing. Everything is bullish here. Trend intensity rating is 10. Excuse me. Momentum is strong, it's above zero and expanding. Volume is good, price is good, it's above the average. So in these situations, there is no argument. You just follow that with your stop. So GR Engineering, trend intensity rating +10. It looks quite interesting to me. Okay, so that's one little stock. Now my last stock I've got for you, which is my stock of the week out of my 162 stocks, is Endeavour Group. As I said before, these consumer staple stocks have just been humming along without sort of exploding too much. But Endeavour, since listing, it had a nice little trading range here pattern for a while. It broke out and then it started to rally quite nicely. We've seen some nice little green bars here. Even these red bars here, what do we know about these? We know that if it doesn't affect the price, then it means that the selling is being absorbed. So the price hasn't gone hound here, the selling's been absorbed, and as soon as that selling dries up it goes again, and a bit of volume. Momentum is fantastic. So its trend intensity rating is 10. Endeavour Group looks like it has legs. Okay, so there's a few stocks for you today to have a look at. It's getting very interesting in the market at the moment. There's a lot of stock that have been sold off. They're starting to rally. Some are looking interesting, some aren't. We've got to look at the volume patterns. We've got to look at the standard of support. We've got to look at the price action to give us the ones that we really want to go for. So they're starting to appear on my radar, and I would think there'll be more stocks coming in over the next few weeks, next few months. Okay, so that's the stocks I've got for you today. Now I want to go to trading tactics and have a look at that for you. Okay. So conquering your trading demons, it's been a big problem for a lot of people trying to create a successful trade plan, trying to trade successfully. The trade plan itself is not that difficult. It's actually the execution that's the hardest part. And I know there's a couple of common problems that I come against all the time with my portfolios and with members wanting to discuss things about how to improve it. So firstly, conquering your trading demons. The single most common problem amongst traders is the ability to execute a trade plan without second guessing it. Okay, that doubt, that little guy in the window in your ear. There's always that guy saying, well, should I, shouldn't I? It really is just a matter of just doing it, okay? If your trade plan's good, you've done the hard work, it should work out for you. So don't second guess yourself when you already know the answer. Humans do strange things, as it says down here, and they do strange things, especially when it comes to trading and money on the line. They can't seem to think clearly. It's a habit-forming thing. So conquering your demons. Your trade plan is a special gift to yourself. You've made it, you've created it, you've designed it from your own mind. It's your trade plan, and this is what you think. Now, it may not work out exactly to what you want at the start, but you can always fine-tune it. And the simplicity of the trade plan is always the best way to start. So when you build your trade plan, use it wisely, sensibly, and responsibly. Your trade plan is your partner and your guide through the market because it knows better than you do or our emotional minds, okay? So it's giving us a fairly concrete, clear, precise path through the markets for us. So that's what it does. Okay, so really, in the end, you have the power to make a simple choice. It's a choice of whether you're going to do it or whether you're not going to do it. Okay, so either you follow a trade plan and become a consistent winner by using those rules. You will take losses, there will be drawdowns, and that's all fine. That's all part of trading. You can be happy about that as long as you're not losing too much money. You can second guess a trade plan. If you do that, you will become confused and inconsistency will drive your returns, and that's not the right way to develop a trade plan. Okay, so we always want to think, well, we take the comfortable route of saying, I don't feel good about this trade, I'm not going to do it. And then, of course, you see it take off the next day. It could be Brambles, could be any of those stocks that have just gone, not like stocks, all of a sudden they turn up and run. So which path are you going to take is up to you. Conquer your trading demons, take a brutally robotic approach. Your levels are set, action them. You buy when you're told, you raise your stop when you're told, and you sell when you're told. And that's what your trade plan tells you to do. There are only 3 actions when you trade, really. I'm going to break it all down to the most basic sort of stuff. You get your signal from your trade plan, which tells you to buy. I get a weekly high through a certain price level, tells me to buy, so I buy on Monday, and that's what I do. Okay, then each week, each Friday, I go through the week, all the stops compared to Friday's close, and if I need to adjust my stop up, I will. I never adjust my stop down, but if I need to adjust it up, I will. And with Computershare, I've been adjusting it up and up and up for 18 months. And not all stocks, unfortunately, but they're the nice trades, and they're the ones that really make a difference to your portfolio. When you get onto those and you actually make that money, that's the really good thing. Okay, so weekly raise your stop. You're just monitoring it every week. That's all you do until you come on Friday and the price, Friday's closing price, is below your stop. That's an exit signal, so on Monday morning you sell, and that's all you do. Now, be it a profit or a loss, you then move on. You don't procrastinate what could have been, should have been, maybe could have been, but you just move on to a fresh start, okay? This is all about keeping yourself clear, losing baggage, making sure your biases aren't involved, your emotions aren't involved, and keeping a really clear focus on what you do. Okay, so the requirements to run a trade plan, you must have the ability to respond to instructions. Simple, okay? Ability to shut out irrelevant noise. So when you make a decision, don't say, well, what's the dividend yield, or what's the PE ratio, or what's the trend intensity rating? You've got your trade plan, you've got your clear decisions on why you buy, okay? Be accountable or employ a robot. Now, you can be accountable to somebody. Trading on your own is quite a difficult thing because it's being accountable to yourself, you can kid yourself, okay? So you need to be accountable to someone. I have to be accountable to all my members because as soon as I do something wrong, my members will tell me. So everything that I do and why you see is why it's so clear and simple is because my members will make sure that it's right, because if it's not, they'll tell me. And that's fair enough too, because I've got to follow it. Okay, so be accountable, or else employ a robot to do it. They can be your best friend. They don't think, they don't have emotions, they just do. Okay, so my new best friend is a robot. It performs automated functions to the letter. So no more could, should, or maybe. Just take the leap of faith and just get in there and do it. Okay, so dream big and have faith in yourself, because you've done all the hard work. Have faith in yourself, and you will find that you will be far more successful. Okay, so that's really all I've got for you today. I hope that was fairly brutal but honest in my trading tactics today. Just to finish off, let's say proper execution of a trade plan is where the most common breakdown occurs, and you will know if you're doing that, and the majority of people are, because I have this conversation with them and they say, I know but I can't, I know but I can't, and that's frustrating. It's when we disagree with our trade plan, but emotions don't matter, and that's why you have a trade plan, because emotions don't matter. When we disagree, it doesn't matter. You have a trade plan, it tells you what to do. Be accountable and honest with yourself. It's not easy, but it's a must to deliver the results you want. Okay? Now, the last year has been a hard market for anybody. Trend traders, range traders, all sorts of traders. It's been difficult because trends haven't really developed, things like that. But they're markets you have to deal with. And don't get too sad. Just be poised and know that the market will have a run at some stage. But you need to be prepared to be on that. Like our 5 stock and our 10 stock. If the market takes off now, then we're ready for it. We still got our stops in place in case it doesn't, but that's how it works. So that's how we do it, how we make sure we're ready. We don't wait for the market to take off and move high, and then jump on it. We make sure we get our signals nice and early to jump on them. So you have the power to make the choice of whether you're going to follow your trade plan or not follow your trade plan. It's a really, really critical decision you need to make. Okay, and that's what we do at Stockradar. As I said before, you are my discipline. I have to be accountable to you, and that's important to make sure it all works. Okay, so stay safe, watch your trends, heed your stops, and I'll see you all next week.